Hello, hello. My name is Jon Markee, and I am your financial guide for this presentation, the Financial GPS. I represent the firm MyBuilder CPA. Why are we called MyBuilder CPA? Because we act as the outsourced accounting department for all of our clients, and we focus on customizing all of their procedures and processes specifically for them. So we ask all of our clients to call us MyBuilder CPA. I'd like to get started with a fun poll, and if you can, just drop your answers in the chat. I would love it if you could let me know what percentage of your hard-earned profit do you think is actively leaking away right now through unplanned events on your job sites. And while you're dropping that in the Q&A, I want to tell you a little bit more about our firm, MyBuilder CPA. Our firm's core value proposition is to serve directly as the outsourced accounting department for all of our clients. This is how we provide clients with a team of highly skilled staff accountants at a fraction of the cost of hiring a single less than full-time employee. Our CPA license allows us to work in any U.S. state, reinforcing that the frameworks we teach are universal best practices, not geographically limited. So we've got some answers coming in. I see some percentages here, and yeah, they are in line with what I would expect. Now, if you think you're ever going to get profit leakage to zero, that's probably not the case. We always have little unexpected items, and that's perfectly normal. But as you'll see later on, we really want to focus on the most material, which means the most largest items first, so that we can improve your profitability. Let me tell you a little bit about myself. I've been working as an outsourced CPA controller, CFO, and accounting department for construction since 2018. I established my firm in 2017 and initially operated as a generalist, but I quickly learned that construction is my focus. I cannot believe our firm will celebrate 10 years next year. I've been using BuilderTrend since my first construction client, but now we work equally as much with JobTread. We also have clients who choose not to use either software, and that's okay. We have a team of excellent staff accountants, so we're able to help our clients along every step of their business journey. We have a true mission of service, so we often get pulled into non-financial conversations, and somehow there's always a financial impact. So I've seen every corner, every aspect of construction companies. I've had clients bring me to interviews with project managers, and I've hesitated in getting involved in some of those things. But at the end of the day, I realized it's really my life that will be impacted if this person hires the wrong fit. So, hey, anything I can do to help, I'm trying to do. And it really allows me to get a full 360-degree view of construction companies. So, yeah, it's been a blast. Just like everyone else in this room, I've been on my own unique business journey, and I'm an open book about my story with anyone I work with in hopes that it will help them. So let's talk about the most common problems I see when we talk to a prospective client or someone who's starting to work with us for the first time. And this pertains to a lot of people who might not really have their accounting process down yet. So we find messy books all the time. It usually comes from a lack of software knowledge that should not be a focus of the business owner. Really, the business owner should be focusing on high-level, big-picture things like making sure the right team is in place to deliver the best experience to the client. Everyone else in the room can make a lot more money focusing on their business instead of trying to figure out QuickBooks. And then the messy books, it usually results in a data delay of 30 to 45 days behind the actual physical on-site progress, which means your financial statements are historical rather than tactical. And it moves into reactive cash flow. Builders are some of the nicest, most generous people in the business world, and I see too many of them financing projects for their clients. They are getting paid after the work is already done, which means they are carrying a line of credit. Even worse, they're usually just absorbing the cost of interest on that debt while they carry out the work. So a highly profitable business can still struggle from reactive cash flow. And then finally, we have margin illusion. People I come into contact with are getting their numbers far too much delayed. We already mentioned that with the messy books. But by the time they realize they've lost money on a job, they have already sold 3 more jobs with the same losing budget. And I always joke, it's better to sit at home on the couch and do nothing than operate a job that loses money. Oops. Next, we have the blueprint for profitability. So how do we stop these problems permanently? First, you need to manage a business on the principle of ratios. This means you look at every cash outflow as a percentage of the income you bring in the door. You need to look to industry experts to understand what those ratios should be as a percentage of your revenue. All businesses, even the most successful ones, have to make changes to their expenditures from time to time, all based upon these ratios. So for custom builders, remodelers, renovators, you really want to be generating 10, preferably 15% of net income as a proportion of your revenue. You need consistent financial reports that are comparable so you can see the trends and the progress. If you make a change to your expenditures, you want to be able to look back on previous reports to see what your numbers were like before the change and after the change. And ideally, you want a report that will give you those 2 time periods in separate columns so you can see the numbers right next to each other. You need immediate feedback when something in your financials no longer justifies its cost. And that's what these ratios will provide to you. So not only does a good accounting team member send you your financial reports, but they also give you comments on your ratios and how you are doing. Without this, you will just maintain status quo right off of a cliff of failure. So it's one thing for your accountant to prepare all of your financial statements and just send them to you. It's another thing to provide some commentary and tell you, hey, it looks like advertising and marketing is on the verge of overspend. What can you do to fix that? Let's talk about building a solid foundation in your accounting operation. Let's be honest, accounting is not rocket science. There are plenty of out-of-the-box tools that you can implement, and as long as you have a qualified accounting team, it is just plug and play. Starting with the NAHB formats, they literally have a guide chart of accounts that can be implemented in just a few hours, and it is the foundation of your financial reports. Actually, now that I'm thinking about it, we have a free chart of accounts on our website that you can download. It's in the NAHB format, and it's already manipulated into a spreadsheet that you can just delete the accounts that you do not need, because not all chart of accounts are needed for every business, and you can just upload it into your QuickBooks. The NAHB chart of accounts is a pre-built guide that can be integrated into your business in just a few hours. This standardization allows for direct, accurate cost firm comparison across industry benchmarks that we just discussed. And then cost code linkage. So any good job software should link to your accounting ledger. And there are so many reasons to enable this. For example, job software, JobTread links to Ledger, QuickBooks Online. Do not waste time with double data entry. I pray that you are not paying someone to enter something in your job software like JobTread and then also paying that same person to enter things in QuickBooks. Furthermore, it's not just about avoiding double data entry. It's also about preventing manual translation errors when moving data between JobTread, BuilderTrend, and then into QuickBooks. And if you are manually updating numbers in a spreadsheet, just be very careful. If a spreadsheet is the basis for your P&L, then there is a huge risk of mistake just by fat fingering a number, or if somebody sits on a keyboard and deletes all of it, you're really running a high risk. Not to mention, you cannot easily reconcile a spreadsheet P&L with a bank statement. And then finally, as part of the foundation now, we have artificial intelligence. AI implementation is here to handle the heavy lifting of recurring transaction management. It utilizes automated rules to perform structural audit checks and real-time validation of coding accuracy to prevent profit leakage before it happens. So we are leveraging AI whenever we can. If we can get it to enter bills, receipts, do a comparison analysis, if we can build a bot that we can talk to about the financial situation of our client, we are doing everything we can to lean into it. So then we are always faced with the field to finance integration. So how many of you have weekly meetings that include both accounting and field project managers in the same room? If you are not doing this, I highly recommend doing it. I know we all just want to send the accountant over in a corner to sit and crunch numbers, but you will benefit so much by inviting that accountant into your field project manager conversations. You want to get them involved because all of those non-financial metrics eventually turn into a financial result. So these non-financial metrics such as schedules, tasks, and even your culture, they're all going to impact your bottom line. It makes sense for you to schedule it makes sense for your schedule to be linked with your purchase orders, your budget, your change orders, and especially your accounting system. Do not keep your accounting team in the dark. They have powerful insights that will help you. If you are going over budget, if your POs are exhausted, you need to know yesterday. The goal is to build an unbroken data bridge where if a project is going over budget or a purchase order funding is exhausted, leadership needs to know immediately, not a month from now. You need to be able to make corrective action right away, especially in this volatile market where prices change unexpectedly all the time. So a real team is collaborative. Get them talking, even if no one likes the accountant. Consider an incentive-based compensation bonus program to reward all team members, even accounting, when your company reaches the success goals that you have set. The data architecture should deploy direct API connections so that estimations, approved selections, and client change orders transfer automatically into your financial ledgers. This eliminates data silos and ensures that field managers, purchasing agents, and corporate accountants view identical cost commitments concurrently. So you really want your field and finance teams to be integrated. Cannot stress that enough. So let's talk about some of the common margin leaks that we see for people in the wild, people outside of our client base. Stopping the margin leaks starts with planning, which needs to happen even before you have a signed contract with the homeowner. Our clients who use purchase orders experience at least 10% savings over those who don't. And I hear it all the time. Purchase orders are so much work, takes so much time to enter. We don't really know how the job is going to go. How can we do this? How can we benefit from templates? Even if you're creating purchase orders on the fly, that is better than not using them at all. When your sub or vendor overcharges you, how can you prove it without a purchase order? Without that document that shows what you originally signed up to pay, you have no idea what is driving these cost overruns. And it can even be used to generate a change order for the client. Say that you forgot to have the client sign a change order and the work that the client asked for came in above and beyond the cost set in the purchase order. What better way than to take the original purchase order and the final bill from the sub and bring it to the client and say, just have an honest conversation and say, you went over budget, we need you to pay this. Just food for thought. Subcontractors are not always trying to charge more than their original estimate. We all know that. So even when the scope is legitimately increased, you need an original document to compare it with. It might be a very legitimate increase, but this is just where the purchase order comes in. I've seen some of my clients be able to turn around And like I said, turn that into a change order. And then with the purchase order system, make sure that you are actually taking the time or having someone else make the time to match the bill from the subcontractor with the original purchase order. So I know that this takes extra time, and ideally we will have AI doing this for us soon. But if a bill comes in that is higher than the purchase order, ask yourself if you really have to pay it and what notifications are in place. So it's one thing to have the data. It's another thing to actually have the data in your mind. So let's talk about cash flow, because I mentioned earlier, many profitable companies can still have crippling cash flow. So too many accountants only focus on the past. So when you finally find an accountant who looks into the future for you, you know you've got a good one. So even in this world of AI, where AI is fantastic, spreadsheets are still cool. It does not have to be a fancy AI cash flow model to tell you what's happening next week, next month, next year. Operating without a plan is a plan to fail. A spreadsheet forecast is the epitome of the KISS keep it simple method. You just have a spreadsheet, you have your cash inflows and outflows for the next coming time period, and you look at it. But can't AI do that? Yes, of course. But our most successful clients know their numbers inside and out. How can you commit your numbers to memory if you just rely on AI to spit it out in a new spreadsheet? Take ownership of your financials. No one cares about your numbers more than you do, not your employees and not even your accountant. So just keep that in mind. A healthy spreadsheet, you can invite AI to collaborate with you, do a lot of the busy work, but know your numbers in your mind. Have that cash flow spreadsheet handy so that you know what you have to pay out next week and next month. Financial clarity depends entirely on strict calendar-driven operation routines. Every day, me as a business owner, I'm looking at my own cash flow every single day. And so I would certainly expect the owner of a construction company to be doing the same thing. I would also not process accounts payable more than once a week. So I know we have subcontractors coming into the office all the time, all the days of the week, asking if they can get paid for work that was just completed. Set a day and a time. A lot of our clients pick Thursday or Friday. Do all of your check runs on that day, and then you don't have to worry about being constantly bombarded with these requests. If you get to a certain volume, sure, you can process AP on a daily basis, but you need a dedicated team for that with agreed upon controls and procedures. And then make sure that you are invoicing your homeowners at least twice a month. If you do not send out invoices on time, you're just suffocating your own company. And then always build in a little bit of a cash reserve. Try to have an emergency fund, liquid capital reserved. Have it to absorb unexpected supply chain delays or client funding. But the other thing is, we see too many of our clients funding jobs for their clients when it should be the other way around. So anytime a client is willing to pay up front, take that money. In most cases, require a deposit for work that you have not yet done yet. Once you get into the habit of relying on a line of credit, it's exponentially more difficult to get out of that habit, and you're always paying interest expense if you get there. So then let's talk about accuracy. So whether AI does it or not, there are still many accounting tasks that must be completed every month to ensure accuracy. For example, all of your balance sheet accounts should be reconciled on a regular basis. It's easy to remember to reconcile all of your bank accounts and credit cards, but when was the last time you looked at your fixed assets and your equity balances? They might not come with a nice, pretty PDF statement from the bank at the end of every month, but you can at least look at them to ensure they are still reasonable. I've seen too many people look at their balance sheet and all of a sudden, whoops, we sold that truck 6 months ago. So make sure those numbers are accurate. All financial statements have a degree of inaccuracy, but the systems should be designed to prevent material misstatement. That is an accounting term. It means we are trying to prevent the biggest mistakes. So for example, we can debate all day whether something should be categorized to supplies or office expense, but unless it's more than a huge dollar amount, it really doesn't matter because your bottom line is still accurate. If it's a $10,000 mistake, yes, that requires a lot more attention than a $20 mistake. So like I said, there's always going to be little transactions that maybe could be categorized as something else. Don't sweat it, at least on the P&L, less so on the balance sheet. We always need the balance sheet to be accurate because that will haunt you forever. But with the profit and loss, it resets after every period. So you really need to be focused on finding the biggest mistakes first. It is a risk, even in AI financials, even in companies that have very few transactions, there's always the risk of something being inaccurate. This is especially true when you're reviewing your job costing. A lot of times something is booked to the right account, for example, cost of goods sold, but it's on the wrong job. So that also needs to be accurate because when you go to bill your homeowner, you need their bill to be right. You need them to have confidence in your system. And you also need to refer to historic financials to make better decisions in the future. And without accuracy, you are not able to make those clear decisions that you deserve. So regardless of AI automation, every single asset account on the balance sheet should be reconciled, preferably every month, but for the accounts that don't have statements, maybe you do those every quarterly, but it definitely includes non-liquid categories that are frequently ignored, such as fixed assets and equity accounts. We have a saying in accounting that we want things to be complete and accurate. So that means when you look at your balance sheet, not only do the numbers need to be accurate, they need to match their true value, but they also need to be complete. We need to have all assets and liabilities on there. In my example earlier, when you realized you sold a truck, that's an issue of completeness. The truck should be removed from the fixed asset listing on the balance sheet, but also another flip side of completeness is if you bought a new truck, you need to make sure that that is also on the balance sheet. So you must use clean, verified historical financial data to make smarter, more profitable strategic decisions in the future. So the goal is not perfection. As with all financial statements have a degree of inaccuracy, but we are looking for the most material mistakes first. So as I mentioned before, there are some industry metrics that you should be evaluating yourself against all the time. And these are pretty out of the box metrics. So you should be using the NAHB chart of accounts to maintain your books in a way that is consistent with industry norms. Not only does that give you consistency and comparability in your own financials, but it also allows you to gauge your success with your peers. Hopefully all of you are part of some kind of networking group and you can sit with your peers and see how their business is performing to yours and get their insight in, for things that they're doing better than you on, have someone tell you what's causing that. And in order to be able to have that conversation, you need those financials in the NAHB format. So we see industry average gross profit margin. It's usually between 12 and 16%. And that translates to as low as a 4% net income compared to the revenue that came in. I mean, we've also seen companies that lose money, and that's an even more serious thing, but we really want to push people to have a gross margin closer to 25%. That is what you are worth. So whether you're doing cost plus or fixed bid, you want to be able to look at all of the revenue, all of your income that came in the door, minus those costs that you had to build those specific jobs. You should walk away with 25% of that income, because keep in mind, you've also got overhead to pay, and that comes out below your gross profit margin line. So you've got things that might not necessarily be able to be charged to the job, the branding, the office. And so you really have to aim for a high profit margin on all of your jobs, because that's just the tip of the iceberg as far as the costs go. I would definitely recommend keeping 3 to 6 months of overhead in reserve so that you can absorb any unexpected events, and then watch your overhead. Make a budget, forecast your cash flow for the month, for the weeks and months and years to come, and also forecast your cash flow. Yeah. So if you remember nothing else from today, remember this slide. If you have not done so already, adopt the National Association of Home Builders Chart of Accounts in QuickBooks. Just make it so it works for you. Integrate your project management cost codes to your financial software. Make sure that your job software is talking to your accounting software. Not only does that eliminate double data entry, but it also ensures you against mistakes. And then make sure that purchase orders are being used for all vendors. Even if you're creating the purchase order a day before you're asking the sub to do the work, have a document before they start so that you can capture what the plan for that cost was. And then finally, make sure all of your bank reconciliations are completed by the 10th of the following month so that you can have a quick financial result so that you know what you need to change. And with the last few minutes that we